welcome. You're watching NDTV Profit. I am Mahima Vajrajani. Well, one company that is in focus is Raymond Limited. Well, they're developing two back-to-back Bandra East projects, that is in the real estate segment, and the revenue potential combined for these two projects is 4,000 crores, which is almost 2.5 times of what the company's revenues are from the real estate business at present. But to discuss more about this, how FY25 and going forward is shaping up for the company, we have with us today Mr. Amit Agrawal, the Group CFO of Raymond. Welcome to the show, sir. My first question to you is that, back-to-back two real estate projects in Bandra with a revenue potential of 4,000 crores, which is almost 2.5 times of your revenues from real estate segment at present. I just want to understand that, how quickly will you get there, and how much will this add to your bottom line overall?
Sure. No, thank you. Thank you for having me on the channel. First of all, let me explain you what is our real estate journey. Real estate, we started with a 100-acre plot, which we have our own land in Thane, where we are constructing right now and sold almost 40 acres, where we are doing 4.5 million square feet, which has a potential, which has a revenue of almost 9,000 crores. We still have 60 acres, which will deliver me another 25,000 crores of revenue, which will be delivered over a period of 7-8 years. So overall, from a Thane land point, we are talking 32,000 crore as a total revenue potential, which is being developed as we speak today. And in the year 23-24, when we recorded the revenue, and when we talk about pre-sales booking of 2,400 crores, it consisted primarily of the Thane. However, because Thane land is a finite land bank, we believe that the real estate is a core business of Raymond Group. Now, in order to expand that business, what we needed to do was get into some kind of an expansion, which will be led through a joint development agreements. And we see a great opportunity in the MMR region. And as we speak today with you, with the recent which we did on the Saturday, we have been able to close 4 JDAs, which would translate a revenue potential of 7,500 crores. Now, this 7,500 crores, 2 in the Bandra, 1 in Mahim, another one is in Sion. So now these projects of 7,500 crore will not be delivered from today to tomorrow. It is a delivery timeline is anything between 4 to 6 years. And whenever you sign a JDA project, it does not start when you sign it today to tomorrow. It will take 1 year to prepare because the designs needs to be approved by the local residents. They want to understand how it will be built, but they have given us the permission that we should be their partner. So like in this project, we will be constructing the carpet point of view more than 500,000 square feet, of which, let's say, 1/3 will go to the existing tenants whom they are going to shift, and 2/3 will be available to us for sales. And that is why it is a 2,000 crore revenue. So overall, when we are talking about 7,000, and if you see, we have said very clearly that over the next 3 to 4 years, our target, what we are considering as a target, that almost 40 to 45% of the total revenue should come from the JDA project, and 55 to 60% should come from a Thane project. So, and we have also outlined our journey that considering that by the end of this year, let's say we will have a JDA projects anything between 8 to 10,000 crores, 10,000 crores. So now on the next 3 to 4 years, your annual revenue bookings, pre-sales could be easily in excess of 4,000 crores. And we have been working, if you see, we are very focused on cost. We are very focused, and we are not just selling you an apartment, we are selling you a lifestyle. And because of that, we have been consistently making a margin in the range of 25%. So when you talk about our bottom line, which you said, so we believe in the next 3 to 4 years from now, roughly anything between 3,500 to 4,500 would be the revenue, and accordingly 1,000 crore plus would be our EBITDA margin.
Understood. Mr. Amit, that answers a lot of my questions. My next question to you is that since you mentioned that you want real estate to be one of your core businesses, what percentage of your total revenue will real estate be in the next 5 years? At present, it is at 17%, but going forward 4 to 5 years, where do you expect the 17% to go to?
Very good point. It is slightly the way we are looking at it. If you see, we have demerged our lifestyle business right now from Raymond Limited into Raymond Lifestyle business. So under the Raymond Limited, you will have only the real estate business as well as the engineering businesses. So now, as a group, if I talk about as a group, we believe over the next, because all my businesses are growing and have a very phenomenal growth plans. Even the lifestyle, we have launched the ethnics, we have launched new products. Apparel is we are doing a distribution network expansion. So all that is helping me for the growth. So I think over a normal period of time, let's say 17 has a good potential to go anything between 25 to 30%, let's say in 4 years from now.
Point taken, Mr. Amit. Now, I'll shift focus to your textile business. I understand that your lifestyle business is different now, but, YOY textile business has grown only 3% in FY24. Do you expect the same trajectory in FY25, or do you see some kind of improvement in it? And what are the trends that you're observing in the overall textile industry?
So look, we have to understand that the year 23-24 was not one of the best for the retail consumption. The retail consumption story did not play out as it would have played out in 22-23. However, we know very well in India that weddings is an integral part in India. There won't be possibility that the weddings won't happen. It's only a question of time. It gets shifted sometimes. Like this year summer, we don't have practically any wedding days, but it does not mean. So I believe every year, anything between 90 lakhs to 1 crore weddings will happen. And the other part is very simple, that a wedding won't happen without a Raymond suit. That is also given. So to that extent, what I feel is that the growth in this year was muted for the external reasons. However, if you look at my branded apparel, which is very, very important, fast growing segment, we have delivered a 20% growth on that particular segment. Now, this has been possible to achieve through the big retail distribution expansion. We went on to expand our retail footprint in a very large manner. We opened last year 200 plus new stores.
Right.
And over the next 3 years, we also plan to open another 500 stores. So very, very clear. वो कहते हैं ना जो दिखता है वो बिकता है. So when you have the product available, when you have the store available, the brand has a great value. People connect with the brand. So they would come up to the store, to the likes of Park Avenue, Raymond Ready to Wear, Kala Plus, and so on and so forth. So, and ethnics. Let us not forget that ethnics is something which we have launched. We have opened already 115 stores. We are seeing a good traction. And now these businesses take a while. And when the wedding comes, the testimony is then that people buy and then wear it. So I think that is one of the reasons why you should consider that over the next 3 to 4 years, we have given very comfortably that the business of lifestyle should grow in the mid-teens in the revenue and high teens the EBITDA growth will happen.
Right. I completely take your point. One more question on the financial aspect side. You're sitting on an overall group cash flow of 680 crores. What are the plans with respect to same? How do you plan to utilize this 680 crores?
So I'll tell you, the best part is that all our businesses are significant cash flow generating business. You have seen even the real estate journey which we built of a 2,500 crore booking has come with practically net debt free business. All the businesses are net debt free, and we do not have a very large capex cycle to run. We are only doing a capex cycle in the garmenting business, which we are taking full advantage of the China Plus One. So that's the one very attractive business which we are taking full advantage. Now, as far as the cash is concerned, you saw that in the engineering line, in the engineering segment, we had the business which was not a very fast growing, and not also in the sunrise sector. We got an opportunity with the Maini Precision Engineering, and we bought this business, but a very attractive valuation, and into the sunrise sector, which is aerospace, defense, electrical vehicle. And combined auto component business is almost 1100 to 1200 crore. And this business also has a great growth opportunity. So we have a lot of opportunity in terms of the core businesses, which is lifestyle, the fabric apparel business, the real estate, as well as the engineering businesses to grow both organically and inorganically. And I'm not going to comment what is that inorganic or what is that organic growth, but we have a very clear cut out a plan that, like, we sold our business FMCG at 80 times EBITDA to Godrej at 2,800 crore. We got the cash, we cleaned up the debt, and which is 2 years ahead of our timeline, which we indicated to all of you that by 25 we will be net debt free. We became net debt free in 2020. So to that extent, we are very clear, very focused on the approach, but without compromising any financial discipline. Because it is very important, like working capital. We keep a hawk's eye on the working capital, that it should not grow because it has a cost impact.
Understood.
Similarly, on the cost structure, if you see fixed cost, which we told 400 crore sustainable fixed cost, which we reduced at the time of COVID, continues to be there. So I think that is a discipline which we have inculcated across the organization, and that has become the new DNA of the organization.
Right. One last question, Mr. Amit. I want to try to understand your engineering business. As you rightly mentioned that, it has a lot of scope to grow in aerospace, defense, EV components. How are you expecting your, engineering business to grow in the next 4 to 5 years? Where do you think the revenues will go to in the next 4 to 5 years?
I think that would also become anything between 12 to 15% of the total group's revenue, the engineering. I think that is very clear. But the big advantage is this is a business where once you have entered with the big aerospace engine component guys, it is given for at least tens of years because you don't get exit unless until you mess up the quality. So I think that is very, very important. The inroad is very difficult, but once you are in with them, then you have a very long-term business which has a potential to grow. And the kind of backlog which we have both on the Airbus 320s and the 737 Maxes, one knows very well that it is given for us, and we are into the engine critical components. We are today machining titanium, Inconel, which are very, very noble soft alloys. And I think that is something which puts us into slightly higher category of machine processing.
Right. Well, Mr. Agrawal, thank you so much for sharing those wonderful insights. Thank you so much for taking our time and speaking with us at NDTV Profit. It was a pleasure talking to you.